Thank you very much, Gavin. I really appreciate it. Good morning, everybody. I'd like to welcome my panel up, and I will get them to introduce themselves individually and save me the grief of having to run through their bios and let them do their own talking. Thank you. So I'll run from my right to left here and start with Mr. Owen Hegarty, Executive Chairman of EMR Capital. Good morning, Owen.
Good morning. Good morning, Stuart, and ladies and gentlemen. Thank you very much for the introduction, the opportunity. Yes, I'm Owen Hegarty. I'm the Executive Chairman of EMR Capital. EMR Capital, the new force in mining and resources private equity. We are based here. Our technical and operational headquarters is here in Melbourne. Our financial and corporate headquarters are Hong Kong. We're a private equity fund with about $5 billion USD, something like that, more or less, under management. And we've got multiple worldwide operations and projects. And we focus on a number of core commodities, including gold and copper and other base and precious metals. And in the bulks, we're into potash and metallurgical coal. So multiple people and operations around the world. So that's what I do, Stuart. Thank you very much.
Thank you, Owen. Next to Owen, we have Steve Morgan, Principal with Automic ESG. Good morning, Steve.
Yeah, good morning. Thanks, Owen. I didn't realise until Owen started talking how closely our business, my previous business name was. I founded a company called ESG Capital about 2.5 years ago, and we were recently acquired by Automic Group, who I'm sure the people in the audience are aware of. So Automic are one of Australia's leading share registry and fund registry platforms, and I'm heading up the national ESG team there.
Thank you, Steve. Next we have Aletta Boshoff, who's the National Lead for ESG from BDO. Good morning, Aletta.
Good morning. Thank you very much. So I'm from BDO Australia, based in Melbourne. Our BDO Perth colleagues very busy at the moment with natural resources and ESG strategies. So we look at a whole range of services across various industries, but in particular natural resources, whether it's ESG strategy, whether it's the risk management, whether it's carbon accounting, TCFD reporting. And we are very excited, waiting for the launch of IFRS S1 and S2 on the 26th of June. So yes, a whole range of services.
Thank you very much, Aletta. Next we have Lauren McGregor, Director of Projects for Resource Capital Funds. Good morning, Lauren.
Morning, everyone. Thanks for getting up early. I'm from Resource Capital Funds, which is a private equity firm. We're a US firm that was founded 25 years ago and has solely invested in mining through that time. We invest across the mining life cycle, so right from very early stage exploration through to operations, and we invest globally. I think over the course of our history, we've invested in more than 30 commodities in more than 50 countries, so quite the breadth. We now also have a mining technology fund as well, which is exciting for us, and I think that's an important place to play. In terms of my particular role, I wear a few hats, but over the past couple of years, I've spent quite a lot of time thinking about our ESG strategy and how we continue to develop the way that we think about ESG factors as we look at potential investments. So, really excited to be part of this panel this morning.
Thank you, Lauren. And finally, we have Ali Ukani from Corporate and ESG Advisory from Peak Asset Management. Good morning, Ali.
Good morning, Stuart, and thanks for having me here. So a bit about myself. So I run ESG investments at Peak. Peak, we're a Melbourne-based boutique investment management firm. Business has been running for about 10 years now, and we run a co-investment model, so essentially investing across a range of verticals, all the way from resources, mining, tech, to a host of decarbonization verticals. But in everything that we do, we invest our own capital. So we've taken well over 16 companies public and raised $1 billion to date. I came on board Peak actually about 4 years ago, so I run the ESG side of the business, looking at areas like green hydrogen, uranium, recycling, upcycling, and a host of other decarbonization verticals. So pleased to be here. Thank you.
Thank you, folks. So our panel discussion this morning involves a highly contentious issue, and one that's being hotly debated across boardrooms and staff rooms across Australia and indeed around the world. I speak, of course, of ESG, or for those of you uncomfortable with the acronyms, environmental, social and governance. And as mentioned with us today, we've got a number of distinguished thought leaders in the area of ESG and sustainability. Looking to our first question, last Sunday, the world's richest person, Elon Musk, tweeted to his 143 million followers that ESG is the devil. Now, whether you believe Musk's statement or not, many argue that ESG is little more than opportunistic PR, corporate socialism, or the parent of woke capital. Others point to it as a fundamental force for change and responsible business practice being increasingly demanded by stakeholders across the globe, and one that mitigates the risk of capital flight to other jurisdictions who understand and acknowledge the importance of businesses having robust ESG credentials. In considering this, why is ESG an increasingly integral part of informed capital allocation and investment decisions? Owen, if I could go to you first. EMR's investment thesis is commodity-driven and asset development focused. Why do you believe that ESG is such an integral part of the process?
Thank you very much, Stuart, for that. And thank you very much, by the way, to Minds and Money for a fabulous platform here and forum to be able to get together and talk about these sorts of very important things going on, Stuart, in ESG, and lots of other things going on in the mining industry at this time. So look, couple of quick openers, Stuart, if you like, in terms of where we're heading here, with a bit of context, where we're heading in terms of the mining space. Well, we are in for multiple decades of good, strong growth in just about all commodities because the world is continuing to grow, obviously. A few humps and bumps and so on along the way there, but good, strong outlook for mining. And in the last 10, 15 years or so, you've seen the whole energy transition transition from a thematic to a dynamic. So it's actually out there occurring, and that puts another layer of growth actually on our industry. So, and along with that whole energy transition equation comes, of course, greater responsibility with respect to ESG. Because energy transition, in a way, is about it's about the E and the ESG. So you've got these, greater emphasis, if you like, greater growth on all of those things. Okay, so coming back to ESG, Stuart, we in the mining industry, it's no stranger to us. We've actually been doing all of those things: environmental management, social performance and governance, and got all of those things. The squeaky wheel gets the oil from time to time, and the media, so there's the odd transgression type of thing which tends to get out there, but we as an industry believe that we've been going quite well. Doesn't mean we're perfect, of course. You've got continuous improvement always occurring. You've now got the whole energy transition. You've got increased regulation of all of those things. So there will be a terrific focus on it, no question about that. And we as an operator, as an investor, and heavily involved and engaged in the industry, and I've been in it for a very long time, are looking forward with great excitement and enthusiasm to the next multiple decades of good, strong growth and work inside that whole industry, but of course ESG being such a part of it. And it's not as if it's a chore, it's actually a very exciting and rewarding area to be involved in, the whole sustainability equation for mining. So look, we're very excited about it. And the good news is, Stuart, that you have a wonderful panel here of people who can fill in all of those gaps.
Thank you, Owen, indeed. Lauren, if I could turn to you. RCF aims to build strong businesses through enduring partnerships. how is that philosophy reflected in ESG being such an integral part of the financial equation and investment decision making?
Yeah, look, and I would echo a lot of what Owen just said. I think, you know, the quote that you shared at the beginning there, Stuart, you know, it's a sentiment that we're probably attuned to as a group which primarily has US-based investors, where I think ESG has become very politicised. I don't think that's necessarily helpful for our industry, and I think, as Owen said, we're an industry that understands that ESG factors really are fundamental to the success of a project. So when we're looking to invest, we want companies that have done the appropriate amount of work for the stage that they're at, understanding what's going to be material to their project. And by that, I mean what's going to impact the schedule, what may impact the costs. And really, that's going into our financial models and understanding the risk-reward profile of every potential investment. So I think from that perspective, it's absolutely fundamental. The question that we've kind of boiled ESG down to, I mean, we do extensive ESG due diligence, which is becoming more systematic over time, is whether a company has the intent, the resources, and the capability to deliver on ESG. And I think that's where that aspect of what you just mentioned, Stuart, comes into play, where we're working with our companies, because, you know, they may have the intent, they may not have the resources, so how can we help them to get that? They may be missing some aspect of capability, or they may have identified a key issue, you know, for example, here in Australia around native title. And so where we can help, and we do work with our portfolio companies, is connecting them with the right people to further that understanding, and really at a very basic level, put more detail around the risks and the opportunities, I would add as well, that a particular project has.
Thank you, Lauren. Ali, Peak's investment mandates run from pre-IPO through to late-stage growth companies. How does that fit in with the integral part of ESG going forward?
Yeah, it's a good question, Stuart. And I think if I may digress just a little bit here, the way we like to look at ESG today, given how politicized it's become, is the same way you would look at tech investing in the late 90s or early 2000s. And the two questions you've got to ask is why and how. So why invest in ESG businesses today? I would ask you, why would you invest in Google or Apple or any of these tech companies in the 90s? Because you know that there's this top-down wave coming that's going to be all-consuming, and that it is going to be it's going to shape the next decades. And it's the same thing if you look at ESG today. If you look at why invest in businesses that are building sustainable energy solutions or you know, decarbonization initiatives, it's because it's going to shape the next decades to come. So once the why becomes clear, then we think about how do we invest in it. And when you look at companies on the smaller end of town, it becomes a lot harder, because a lot of ESG today is voluntarily disclosed, and what is voluntarily disclosed is always dressed up. And you have to look past the window dressing and really ask if, you know, this business is incorporating ESG into the core operations of what it's really doing. And I think if you look at private companies, a lot of the times you will find a more earnest you know, impression of what they're doing on the ESG space, because it's very directly linked to core competencies. And we've invested in a number of private businesses that are directly targeting operations and hitting some sustainable development goals. But when it comes to listed companies, I think more so, as Lauren rightly pointed out, you're backing the people. And it comes down to, if you've got, you know, the right people in the right kind of jobs with the right kind of intent. And if you do, then, you know, then you have something.
Thank you, Ali. Aletta, BDO is one of the world's leading corporate advisory firms. Do companies, and in particular resource companies, need to resign themselves to the inevitability of ESG, or in fact embrace it?
That's an interesting question, and I think it comes back to the earlier comments around voluntary versus mandatory reporting. You know, I come from a conceptual place that financial statements and an annual report is all about communication. So your communication of financial results to stakeholders, and that's your main form of communication. if in that main form of communication we only focus on financial aspects, that is what stakeholders will focus on too. And at the moment, especially in Australia, because we only have voluntary inclusion or reporting of sustainability metrics and numbers, and it's not standardized what framework you use. And I should also add, so it's not standardized, it's voluntary. And the third thing, no level of assurance is required. That communication is a problem because you've got communication of financial information in accordance with IFRS and it's audited. And then next to it, voluntarily, you've got sustainability information with no assurance. That sends the wrong message, I think, to investors, to stakeholders, as if this part of the information is not that important. So I think if we want to move the dial, we have to make sure that we get mandatory reporting of the relevant sustainability metrics. There should be a framework. Hopefully the ISSB will bring that now for us. And I think we need assurance to say this is important, it's of equal importance, it shapes the whole story about an organisation. So what we are seeing is, in the end, companies unfortunately respond to the things that are mandated. So even if there's a new accounting standard, we can talk the standard up for years. They do it when it's mandated. And in a way, especially the smaller end of town, and maybe the smaller resources, junior explorers, will only take this seriously if it's mandated. It is definitely coming. And if I look at Europe and at the pace at which all of this is developing in Europe, and the mandating in Europe, the ISSB coming up with a framework, it is coming, definitely. But it's a hard sell at the moment, to be honest, to encourage people. I look at my friends from private equity and say, please help us, because when investors start to ask questions, and when customers start to ask questions, and when people who work in organizations ask questions, it pushes along the voluntary disclosures. But ultimately, I think we need that mandatory bit.
Just on that, do you see that as something that is globally mandated? So there's the opportunity for the global investment community to compare apples with apples, or is it something that should be mandated by Australian regulators for a unique Australian space?
Yeah, I think the International Sustainability Standards Board is trying to bring together a lot of standard-setting bodies and say, let's come up with that generally accepted sustainability disclosures, similar to what the sibling organisation has done for accounting standards. So that will help if we've got a global set of accounting standards that are mandated. At the moment, those first standards, as I said, will be released on the 26th of June. But the next step is, it's then for every country, every jurisdiction, to decide, will they follow that? Now, I know Australia has indicated they'll follow. I know Europe has already followed and in a way is leading. But I think that is the end game. The way we compare financial statements globally, usually prepared under IFRS or maybe US GAAP, here I think there's an opportunity to get one set of standards, and it won't be different in the US. You know, it's one set of standards. I mean, comparable information is what investors want. I think it's what all of us want. How do you compare apples with apples?
And I guess I'll throw this open to the broader panel as well. Is it possible to have an ESG framework that takes into account, particularly when we're looking at the S component, that takes into account some of the inherent cultural differences that exist across the globe? Is it possible to box all of those up into a unified S component that will satisfy a global investment market? Anyone like to weigh in on that?
Yeah, I can jump in on that. I think there's a question to be asked around the distinction between the qualitative and quantitative data that's provided here. And if you look at the ISSB framework, one of the, I suppose, evolutions of that is that it's less prescriptive in terms of the telling issuers what data they need to provide, and more general in that it asks issuers to identify and go through a certain process with some guidelines to identify what are the material financial issues, is the ISSB's approach. And then to really talk about them sort of in a risk language, what the company, why the company identifies that as a risk, and what the company has in place to manage that. So I think that goes a long way to being able to provide some sort of universality with that. But it's a tough job because the standards are so broad and have moved at such different paces around the world, and you've got the ISSB, which is coming in looking for a global standard, but then you've got Europe, which has just implemented their own set of European sustainability reporting standards. So I personally think it's going to be quite a while until there's some global standard, and navigating it for businesses is not easy, and you can quite quickly get to the point where you feel as if you need to report to 3 or 4 different standards, which is impractical for a lot of businesses, at this level. So we're heading in that direction, and it'll be a bumpy ride, but we're not there yet.
Thanks, Steve.
If I could maybe add, I think the positive thing is that in Europe they have an ongoing discussion between the ISSB and the European standard setters, and there's an active attempt to stay together and be on the same journey. I think Europe has gone a little bit faster and further. So the ISSB has a general standard and has a standard IFRS 2 looking at climate risk. I think Europe, and I understand, they've gone further. I think they've got 12 standards, and they've already got a standard around workforce and supply chain, etc. And I agree with that. I think they're just a little bit impatient. I don't think it means that they're going to be significantly different to ISSB. They may be just dragging them along on the journey in a way. But there's definitely an active debate at least, which is good. Hope it's good.
Thank you, Aletta.
So I think what I would also add, this is a very fast evolving and quite a complex space, and it can be quite daunting for junior companies to be contemplating all of these different standards and thinking, well, what do we need to do? But I do think it's a huge opportunity for mining, and RCF has recently signed up to the private equity version. It's another data standard. But what we see is by reporting on some standardised metrics for our portfolio companies, it's a chance to show quantitatively how well mining stacks up to some other industries, and it's a real opportunity, if we can lean into it, to actually make mining as a sector more investable, because as Owen said right at the very beginning, we do a lot of this stuff well, and this is giving us the tools, albeit that they're coming slowly or at different paces globally, but it's giving us another tool to kind of back up the claims that probably talk about amongst the mining industry, but we need to get across more broadly.
Thank you, Lauren. Ali?
I'd like to just add something, maybe I suppose a bit more from a cultural context. I think that a lot of the parts of the world where let's say pollution or emissions are going to come from now are also the parts of the world where things are not as structured. So if you're looking at emerging markets, yes, your consumers are developed markets where you've got well put together plans and policies and structures and reporting guidelines. But then as you go scope 2 and 3, which you will closer to 2030, you're going to go to emerging markets, which are fairly gray still, let's face it, right? And if, to your point, Stuart, if you want to have one system that amalgamates all these social cultures into one standard, I don't think it's going to happen, and I don't think it's going to happen very easily. That is not to say that it can't happen, and I think the solution here is to have a broad overarching structure that is also conducive to subjectivity and cultural context. So if you look at the S in ESG, the social part, and you talk about sweatshops, or you talk about factories, or you talk about pollution discharge into local communities, those things become a lot more problematic as you go to emerging parts of the world. And putting a simple structure around it is not going to inform educated investment decisions. But I think putting disclosures around it and promoting education and behavior from grassroots up, which I think is required in these emerging markets, is the eventual solution that will help.
Thank you, Ali. And just to wrap up the first question, Steve, how is Automic shaping corporate ESG thinking towards attracting sustainable investment?
From an Automic point of view, and just I suppose a bit of detail on Automic, there's around 630 ASX listed clients on the registry, and as a funds registry platform that's got sort of 350 funds on that. So we're really focusing on the corporates side of it, and the market share is really in that kind of ASX 200 plus. And to my earlier comments, the reality for most of those businesses is that they're still at the very early stage of this, and one of the common conversations I have with our clients or prospective clients is that they don't necessarily want to be leaders in this space, but they certainly don't want to be laggards as well. And so they're, I suppose, looking for a level of compliance in the absence of any mandated reporting requirements. They're looking for a compliance level on ESG that's fit for purpose. And so that's what we're working towards, is really providing that baseline, providing it in a way that is kind of respectful of the resources, that is in place for most of the companies on the floor here. That right mix of advisory and technology, because it isn't just as simple as plugging some data into a platform. You do need to understand this space and what it means specifically to your business. So it's that front-end advisory, nurturing clients through that process and what it means to them, and then helping them with the actual public reporting. And I really agree with Aletta's comments before. Providing that reporting at a level that is getting close to the rigour that financial statements have to go through. That's, I suppose, our positioning at Automic ESG.
Thank you, everyone. And we will touch on the standardised reporting frameworks a bit later. Second question is, in the absence of any regulatory or official oversight, business is largely self-regulated with respect to ESG disclosure. And there is, of course, an ongoing compliance cost involved that's often overlooked. And then there are the questions of accountability, expectation, and reasonableness. And going to your point earlier, Aletta, around sustainability and the fact that there needs to be some sort of audit trail associated with that. As a result, how is ESG disclosure assisting investors to mitigate risk, and in moving too aggressively, does it risk undermining the investment thesis for companies? Aletta, if I could start with you, please.
I think what we often advise, when we speak to clients for the first time, we always say the starting point is to consider who are your stakeholders and what would they like you to report on, right? So that's stakeholder engagement or a materiality assessment, right? And if your stakeholder is private equity, or there's private equity involvement, let's engage with a conversation, because we want to make sure we report the measures your stakeholders are interested in. Why would you report on other things? It's about the stakeholders. So who are those stakeholders? Have we spoken to them? And then on the other hand, when we speak to private equity clients, or we speak to banks who provide financing, or who want to provide ESG-linked loans, we would say to them, and as we discussed earlier, to what extent do you include in your agreements, in your loan agreements, in your funding documents, exactly what you want these entities to report on? Because that's a way to assist the process. So you as private equity or as a bank get what you need. Clients are quite clear on what they have to do. So we're trying to push the conversation from both sides because I think that's important. I don't believe in communication in the sake of communication. It has to have a purpose, and therefore, if it has a purpose, it has value, and then we can potentially have assurance. So I think it's hard for us to push the responsibility on a regulator because how do they know what the investors and the stakeholders want? I think sustainability is quite different. For different organisations, there's a different need on the type of information.
Steve, did you have a view on this? Know the disclosure, how investors use it to assess risk?
I suppose my broad view on ESG is that it is an expanded risk framework, and in mining in particular, when you compare the industry to a lot of other industries around the world, the environmental and social risks in particular are very well known, very well defined, and there's been plenty of examples where those risks haven't been managed properly, and it's had a significant impact on companies. And so, yeah, I mean, to my mind, it's good business in the sense that it's taking a broader risk, a broader view of risk in a market where those risks are really financially material.
I think one thing that I would add from an investor perspective, and you know, perhaps Owen, you're similar. As an active investor, the data and the reporting is important to a certain extent because it shows performance in line with, you know, perhaps goals that a company has set for improvement in certain areas. But actually, as we're sort of more involved with our portfolio companies, maybe we're looking a little bit less to the data than some others. But what we do see as important around the disclosure of data is the way that the company is engaging other stakeholders. And, you know, I think it's easy to kind of say, well, actually the data's for the investors. But I think for mining in particular, the way that other stakeholders can understand how a company is performing, and that feeds into the ultimate financial success of the business. So it's, you know, it's a bit circular, but it's probably what makes ESG reporting a bit more complex because there's more audiences than your typical set of financial statements. So there's just different perspectives, and you know, whether that's the local communities or something that we've discussed internally as an organisation recently is employees. And you know, when we look at mining, one of the key risks we're seeing is attracting talented people to build these projects. And so again, by having this consistent, transparent disclosure, you know, supported by decent metrics, you know, hopefully you're overcoming again some of those image problems for mining and attracting people. So it's all very, very circular, but I would say for us, the disclosure is about more than just kind of ticking a box for us, and it's much more broad than that.
Yeah, so Lauren, to your point, instead of just focusing on disclosure for an investor, they should be looking at the broader stakeholder pool, and so should be conscious of what managing their expectations and as regards to what their requirements are, what sort of information that they're looking for, and making sure that that this is a fulsome disclosure that you get. Ali, did you have any thoughts around that?
Well, I think the panelists have summed it up pretty well. I suppose my broader view on ESG is it has to be additive, in that sense that, you know, at Peak we have a lot of corporate clients, and a lot of them are mining companies that have been operating in jurisdictions in various parts of Africa, let's say, for example, where you know, since the 70s or 80s, they've been setting up camps, they've been, you know, creating jobs, they've been building housing or providing educational facilities for the locals, and a lot of that today would fall in the S bucket of ESG, but it was always happening, you know. So is it additive? Are you creating value where there wasn't any to be found earlier, or are you reporting things that you've been doing for 20 years anyway under the name of ESG? So in that sense, I think it becomes, you know, really critical to look at what point is ESG a core competency within the business, rather than being offered as a platitude to an investor. Because as they rightly pointed out, I mean, a lot of focus is given on investments because that is sort of your top-down, you know, balcony view of it all, if you like. But the real day-to-day work happens operationally, and that's with your stakeholders, whether that's your suppliers or your employees or your local community. And I think in order for a company to excel with investors, it needs to perform operationally. In order to perform operationally, it needs to start doing these things additively and as part of its core operations.
Thank you, Ali. And finally, Owen, obviously a lot of what the resources and mining industry does hasn't been called ESG in the past. It's just been part of standard operating procedure. But now we've attached a new acronym to it. Do you think investors reward that type of thinking, and in understanding that mitigation for risk from an investment strategy, is it up to the mining industry to say, well, we've actually been doing it for a long time, we've just attached a new name to it, but don't count us out because we haven't always badged it that way?
Thank you very much, Stuart. Yes, we're certainly into risk mitigations, and we've been doing it for a long time. I've managed to avoid a lot, but managed to collect a lot of them as well along the journey type of thing. One thing, Stuart, that listening to the panel here, just terrific, a small subset of the capability that we've got here in Australia, and an advertisement really for the work that's going on, whether it's standardisation or just the innovation that's going on via the organisations that you have here. You get terrific support from governments, you get great support from the industry associations, AMEC, for example, as well as the individual companies themselves. And they've got just a wonderful, group of people everywhere you go. We used to say 20 years ago that wherever you went in the world, you're going to find an Australian metallurgist or mining engineer or geologist. You will certainly find people with vast experience in ESG wherever you go. And so we've been a great breeding ground. It may not be the right way to put it, but terrific from that perspective in terms of setting standards and seeing that capability sort of permeate around the world. So, and we've got to keep doing it. It's terribly important to keep growing that because the world needs it. Lauren made the point about we want to make mining more investable. That's our job in a way. We're supply side people, so we've got to catch up with that whole supply area. So that's our job, to be able to do that and make it more sustainable and less risky, if you like. One thing I was going to say, Stuart, in that respect, just coming to talking about setting standards, can we do it worldwide and so on? Well, with respect to the governance, whether it's the platforms, the listing platform, public platforms, ASX and so on, we're best in class here in Australia. Rules and regulations, same. So, a lot of worldwide people learn from that. And yes, you can standardise to a large extent. When it comes to the E, if you like, the environmental standards, whether it's tailing storage facilities and water management and various other risk mitigations on site, flood events and so on and so forth. Yes, there's a lot of standardisation that you can do, whether it's government or ICMM or AusIMM or standards, world standards type of thing, those authorities. You can do a lot of it. When it comes to the S, it's a little bit more horses for courses, particularly where you are, and I think that point was made a little bit earlier. It doesn't matter, whether you're in the Atacama or the red dust of the Isa inlier or the rainforests of North Sumatra. You're going to have a social responsibility there. You've got communities. If they're not there when you show up, they will arrive eventually, type of thing. And the expectations and their requirements and so on sort of change over time as well. What you really have to do, apart from doing your work extremely well and get on the ground and do it well, is win the confidence, win the support, win the cooperation, and win the trust of all of those people, that all of your stakeholders. And that's not just the national government regulators regulator or the state regulator or even the provincial regulator. It is that community that is nearby. You have to work with them and win that trust, because one mistake can cost you very dearly. They can boot you out very quickly. It's hard to make rules and regulations about that. You've really got to have a culture that enables you to win that confidence and support over a period of time. Otherwise, there's no point showing up. If you don't have that, or you don't believe that you can actually achieve it. And I have to say, one of the things that our investors actually look for, of course, is that it's top of mind now is the whole ESG equation, and it is that whole social equation. It's coming at us all of the time. Standards of living are being raised around the world. The whole information and communications revolution that has actually occurred. People have got all of that information. Expectations are high, so the demands on us as people who work in those communities are higher. And by the way, it's a terrific opportunity and a very rewarding one.
Thank you, Owen. And that's an excellent segue into the next question here, which is around the standardised reporting. How important is standardised reporting of ESG? Obviously, at the moment, there's an absence of it, but the importance of it to investors and their ability to make those meaningful investment-worthy comparisons. And how should companies choose which reporting regimes and frameworks are most material to their business? Now, Aletta, I know that you've written and spoken extensively on this topic. I'd like to go to you first to get your thoughts. You had mentioned them earlier, but could you expand a little bit more?
Yeah, I might go back to the point that we really say to clients, you need to identify who are your stakeholders, what would they like you to report on. If we want to communicate valuable information, let's know who we're communicating to. I think that's important. So I think even if we come up, let's say the ISSB come up with 24 standards addressing all these topics, workforce, customer satisfaction, bribery and corruption, privacy, etc., right? If there's all these fantastic standards, not all of them would be a top priority for each and every client. And even if you've got a standard on, let's say, workforce, not every requirement in that standard would always be relevant and topical for every client. So this is hard. This is not like accounting, where we've got somewhat boilerplate disclosures and rules for every debit and credit and what to disclose about every balance sheet item. You only have rules for those things that's important to your stakeholders. So I think the key thing is, who are your stakeholders, what's important to them? And yes, we can have guidance on the types of things that we disclose around workforce, and the types of things you can disclose around the community, and the types of things you can disclose around climate. But why would you disclose something, invest time in disclosing something, if it's not relevant to your business? And to me, there's another part to it. A lot of our clients, and we've done it for BDO Australia. I was responsible for BDO Australia's inaugural sustainability report. We went to all our stakeholders. We went to our staff, we went to our clients, we went to the bank and all of them, and did a proper stakeholder engagement, right? And when that comes back, you have to overlay what is important for the business and what the business can do. Because if somebody says to BDO Australia, we want you to focus on life below water, or, that's not what we do, right? We're professional services. So there has to be an overlay of, what stakeholders want and what the business wants to do and can realistically achieve. That has to be the start.
Yeah, and what I would add to that, specifically for this audience, which I know is more at the junior end of the mining spectrum, is we have a lot of conversations with portfolio companies around, well, we want to sign up to this standard and this standard and this standard, and often we're saying, well, okay, they're great ambitions, and actually, yes, that standard would be relevant to your business, but perhaps in 3 to 5 years' time, when the project reaches a certain stage, what we would prefer to see a company doing now is saying, well, actually, those 3 issues might stop you getting to a successful feasibility study. So focus your time and energy on those. Particularly, you're talking to businesses that may only have a handful of employees at the moment. So, identify the gaps, identify, a couple of key experts, in native title, in biodiversity, and understand what you really need to do in those material areas that are actually going to hold you up in future. So I think that's very much our guidance to companies.
Yeah, so I absolutely agree with that. I think it's incredibly important. A lot of organisations come to us and they're so enthusiastic to do the right thing. So maybe they decide to line up with United Nations Sustainable Development Goals, 17 beautiful goals, and they want to move the dial on 17 things. So hang on, let's pick the 1 or 2 or 3 things that's really within your game, within your influence, that, as you would say, would stop you from progressing your business. Let's focus on them first. And then maybe over time address the rest. I agree with that. I think people with good intentions maybe try and do too much.
Steve, your thoughts on standardised reporting?
Yeah, I think it's fundamental, really, for investors. There's probably three elements to it for me. The first one is making sure that your portfolio companies or the companies you're looking at investing in have got a standardised approach to defining the material topics, and so there's a distinct difference between that concept of financial materiality and then double materiality, which is financial materiality combined with impact. So not just the financial impact to the business, but the company's impact on people, the communities, and the environment. So I think that that's really important to make sure, to Lauren's point, if there are 2 or 3 things that the business is going to focus on, that the companies have gone about it in a consistent way. And then it's the actual metrics and the data they provide, and the depth of that. And a great example is carbon, where it's quite typical for businesses to be able to produce a greenhouse gas assessment for Scope 1 and Scope 2, which is operational emissions and electricity emissions. The reality is Scope 3 is always the largest proportion of a mining industry's footprint. So you want to be able to get consistent depth of data, across your portfolio companies or the ones you're considering.
Ali, in your respective organisations make investment decisions based on some of the key metrics that you look for. How important is ESG as a component of those metrics and as part of your due diligence?
Well, look, I think I might piggyback off some of the really good points made here. And there's 2 ways to look at it, in the sense that you've got, obviously, we were talking before we came on stage that we're often shown demos of screening softwares, and perhaps too many of them. But the screening softwares work on a pretty standardized approach. So if you're looking at, as a lay investor and looking at a screening software that's giving you data on a number of ESG metrics, then maybe some information is lost in translation. But that is for more broad strokes investing. If you want to look at more high conviction, high impact investing, then I think the point that Lauren and Aletta made is really what hits home, is that you really need to focus on those high priority, high impact areas. And if you can deliver on them, and we've had this happen. We've had, without naming names, a portfolio company of ours that has been told expressly by a big super fund that we cannot invest in you until you tick off a certain box. And by ticking off a certain box, I don't mean it in a way that it's a platitude, in a way that you actually, create some impact on this high priority area for your business. And this is the case with a lot of institutional investors, especially. And when you're looking at foreign jurisdictional risk and other components such as S&G, you really want to look at how is the company performing on some of those key areas that are high priority, high impact, and also in the end will provide the highest return to the investor.
Owen, with regards to EMR's capital investment thesis, is when you're looking at, when you're looking at individual projects that are worthy of investment, is their ESG reporting rigor and accountability an important component of your investment philosophy?
Well, definitely. Just one, I suppose, example in that respect, Stuart, is that we have our own rules and regulations inside the FOIM, if you like, in terms of what we call the Rule of 8 for investing, and we've got 8 guiding principles for any particular investment, any particular project, mine, existing operation, whatever it happens to be. Must have the tons, must have scale or be capable of getting there, because you ultimately got to be long-term competitive here. It must have the grade, in other words, the quality, and be able to produce it efficiently. Must have a conventional process, don't want to be reinventing any particular wheels. Must have long life, low cost, and lots of upside. So must have all of those sort of things. And one of the keys here is it must be long-term sustainable in terms of actually meeting our rules, regulations, principles, policies and practices when it comes to the whole ESG equation, and that is in respect of whether it's a top-down regulatory regime forced upon you, if you like, or whether it's internal in terms of chasing world's best practice. I mean, you do have to, we're business people. At the end of the day, we've got to follow the money, follow the market, follow the trends. We've got to follow the regulator, but we've also got to follow and achieve world's best practice. So that they become the planks of accountability for our senior people, for our operators, all the way through the system. Everybody's got, as part of their KPIs, benchmarks and targets and various other things that they have to hit. So it's very much a part of our whole accountability equation, Stuart.
Thank you, everyone. I know we're inside our final 10 minutes, so we're on the final question. Recent regulator crackdowns on claims of greenwashing and green hushing has prompted many industry participants to demand standardisation of mandatory ESG disclosures, which we've touched on. In the midst of all of this clamour, however, companies, superannuation and investment funds and banks are still bound by a fiduciary responsibility to maximise returns for their shareholders and members. With that in mind, what do you see as investor and stakeholders' role in holding companies accountable to their ESG commitments and practices while still fulfilling their business objectives? Lauren, if I could go to you first.
Yeah, wow, that's a big question there, Stuart. I think that the thing with greenwashing is it often has these connotations of being quite nefarious, quite intentional. And sometimes that is the case, but I think more often than not, it's actually well-meaning management teams who are doing what they think is the best that they can across ESG issues, and they're trying to communicate, and for some reason they get it wrong. And unfortunately, even if it is unintentional, that can have quite severe consequences for that individual company. And again, thinking about the mining industry as a whole, to have incorrect or misleading information out there, unfortunately, does get more headlines than the good stuff that this industry does. So I certainly think that investors have a role to play in helping companies or as Aletta alluded to earlier, being quite specific around what reporting should look like, and ensuring that there is rigor there. And, again, for an active investor like us, we're actually, looking and saying, well, you're missing resources in these key areas or capability, or, how can we help you get to a stage where you can report more effectively in a way that isn't greenwashing or green hushing. But I think, it comes back to sort of that basic principle of consistent transparency and, using plain English and not trying to hide some of the things that you think you may fix further down the track, or you don't know enough about yet. What we would like to see our portfolio companies do in those respects is say, well, actually, we've got something here that isn't performing as we expect. This is our plan to improving that performance. Or we don't know enough about the biodiversity in this area yet. This is our plan to learning more. So, that's the type of conversations that we have and that we hope other investors across the industry would be having as well.
Yeah, look, the timekeeper has shaved 8 minutes off the clock here, so I'm just going to go through to get some hot takes before we wrap things up. Steve, if I could go to you just quickly.
Yeah, just to tail off on that last question, a lot of the discussion today has been focused on the risk and probably the downside of ESG, but I think as investors, you want to be encouraging companies to pursue the upside of performance on ESG. And I was in a strategy meeting a couple of weeks ago with a client who are a nickel developer, and they're looking at the money they need to spend to get their carbon intensity per product down, and comparing that with the price premium they expect to get for their product. So it's not just about risk, it's not just about cost. There is an upside, an increasing appetite for products, particularly for battery and critical minerals producers that have got the right ESG credentials.
Thank you, Steve. Aletta, final thoughts?
I think it's ESG and sustainability will be essential to actual success in future, and we should stop thinking about it as a cost impediment. And more we are seeing, as you reduce your carbon footprint, you're also cutting costs and opening up opportunities. So I think investors, when they ask for ESG, they're still looking for that capital growth, and so they should. It's good for business.
Ali?
Well, I think I might go back to my opening statement in that I do look at ESG as investing in tech in the late 90s. And yes, there will be a pets.com, but yes, there will also be a Google and an Apple. So once you've got the why clear on why invest, then the how really comes down to looking at core competencies of the business and looking at businesses performing on high priority, high impact targets that are going to deliver the highest value for their stakeholders and then ultimately shareholders.
Thank you, Ali. And we're now into the red zone, but just finally, Owen, your final thoughts on ESG?
Last word.
Last word, please.
Look, I think one of the points that Lauren made a bit earlier was, we've got to make the industry more investable because we are the supply side. We are the problem at the end of the day. We've got to supply these commodities. But, if you can actually have a shining beacon in the night of ESG on your CV, on your credentials in your business, you will certainly attract more capital than anybody else.
Thank you, folks, for your participation today. It's been wonderful. Would you please thank our panel of ESG experts and for their participation today? I think it's been an extremely valuable discussion. So would you please thank our guests today?